Pinterest grew their ad impressions at 55% year over year, double that of tech giant Meta. Pinterest CEO is pointing directly at AI as the cause. So how is a company like this trading at a 19 forward PE ratio? We're going to answer that question in this video. We're going to look at Pinterest Q2 earnings, how AI is driving Pinterest growth, the hidden caveat to consider before investing, and my valuation on the stock. Let's get straight into it. Is Pinterest an unexpected AI winner? Well, to know that, we need to know, what does Pinterest do? While Pinterest is a social media app focused on aesthetics, the company's engine allows people to find inspiration for their lives, including recipes, style, home inspiration, DIY, and others. They have 578 million monthly active users, or MAUs, and over 70% of the users are women. Businesses advertise using pins. You can see pins over here on the left. They're basically just photos, and the targeting is highly effective because the users are already looking to buy. So often users will come on the platform looking for inspiration for what they want to buy, and you can see over here on the left, you've basically got a whole load of aesthetic photos. A user likes this one, clicks on that, and everything within the photo is available to buy on Pinterest or through Pinterest. And this obviously attracts advertisers. Secondly, Pinterest knows what a user's interests are based on the content they pin, save, and search for. So Pinterest has a huge advantage because essentially users that go on there already want to buy something, and Pinterest knows what they want to buy. So they're at a win-win situation. Now, Pinterest revenue continues to be strong, 17% year over year. They've actually seen a re-acceleration since 2023, and they're back up to 17% year over year. This is really good, and it puts them in contention for GARP, which is growth at a reasonable price. And this is one of Peter Lynch's strategies, and it's when the growth rate is higher than the PE ratio. And as you can see here, at one point, the growth rate was 19.3%, higher than the forward PE of Pinterest. Right now, it's just a little bit below. So lots of people are saying that this is an opportunity to buy a company that has a high likelihood of being an AI winner. Some more good news for Pinterest is that their monthly active users is growing above 10%. You can see in blue the monthly active users growing over 50 million year over year, which is about 10.7%. In the red, you can see the growth rate. We continue to see strong growth in the USA and Canada, up 4.1% year over year. You can see that start to re-accelerate as well, which is really good to see. And it's good to see because user growth in the USA is the most important, because the average revenue per user in the USA plus Canada is $7.30, 17.6% of users, yet 72.3% of revenue is from the US and Canada. This is why it's so important. Now I'm going to give you 2 seconds to spot this ad. 1, 2, well, there you go. It's obviously this one here. You wouldn't really know because it just blends into the aesthetic. And the thing is, nobody cares because they were already searching for something to buy. So it's not like, oh my God, there's an ad there. It's more, oh, this goes with my aesthetic. I might click on this. So it's been promoted by Home Universal. Someone clicks on it. It's top rated, and you can literally visit the site straight there. So advertisers find this very appealing because ads on Pinterest usually aren't an annoyance. Ad impressions actually grew 55% year over year, which is double the rate that Meta is growing theirs. This is just insane growth. However, ad pricing has declined 25% due to ad integration in international markets. As there are more users in international markets, more ads are being shown to those international markets, and obviously those ads are worth less because they have less spending power than someone from the US or Canada. So for that reason, Pinterest has to lower their pricing. Now, a lot of this growth could actually be coming from the AI initiatives that Pinterest has included. They have included AI Advanced Visual Search. The company is doubling down on its visual search capabilities powered by AI models. This allows users to find products and ideas without using words by simply selecting elements within the image. This makes it easier for users to go from inspiration to action, particularly in shopping, which is a key monetization path for Pinterest. Now you can see over here, it's just a picture. Someone obviously likes this home aesthetic. They've clicked on the lamp. Now it's searched for the lamp in stores, and it's found visually similar results. In fact, it's actually found that lamp. Perfect. The user can just click on that, buy the lamp, and obviously Pinterest will get some sort of return for doing that. They've also included their AI Performance Suite for advertisers. Now, the Performance Suite is an AI-driven recommendation engine that analyzes a user's behavior, interest, and preferences to show them pins that are highly relevant to their taste. We see Meta doing this exact thing, and they're getting really, really good results. Meta are, their earnings obviously shooting up, as well as their stock. Now with Pinterest, it's slightly different because they can now generate personalized backgrounds for product pins that reflect a user's specific aesthetic. So if a user's into something like Japandi or minimalism, the background of the pin will change, everything around it will change other than the product that is being advertised. So here you can see the breakfast table is the product. Everything else in the picture could just be generated by AI, including the background. But the key here is that this changes for the user. So it could be some different aesthetic in the background for the next picture. Now with Pinterest, they trade at a really attractive PE ratio of 13.2. But when you look at their EV to EBITDA, it's actually 91. And you're thinking, what on earth is this about? Well, first of all, they had a huge bump in net income in December 2024, and this was because of a one-time tax benefit that they claimed, a huge amount, 1.8 billion that quarter. When you take that out of the equation, the PE ratio does not look as attractive, but as I showed you earlier, the forward PE still says 19. Now this unfortunately is because they're hiding their stock-based compensation. 80% of their free cash flow is stock-based compensation. The 19 forward PE ratio that I showed you before does not take stock-based compensation into account. It's adjusted EPS. Now 80% of their free cash flow is stock-based compensation. Their free cash flow growth at the minute is about 29% year over year, whereas their stock-based compensation growth is 18%. So the free cash flow is growing faster than the stock-based compensation, but they're struggling to retain talent, and hence their stock-based compensation growth is still very high. 18% is still very high. On the plus side, they do have great Gen Z user growth, and this used to be a bear case for the company. A lot of people used to say that Pinterest wasn't attracting enough of Gen Z, which will be the demographic for the future. This demographic now represents over 50% of their user base, and this extends their growth runway and is more valuable to advertisers today because obviously they are the buyers of the future Gen Z. An Adobe study showed that 39% of Gen Z start their shop with Pinterest, which is just an incredible stat in favor of Pinterest. If Gen Z are going straight to Pinterest to buy or look for products, now what Pinterest needs to do is become the final part of that funnel and actually get the purchase through Pinterest, which is exactly what they're trying to do using AI. They've also tried to become the end of the funnel using a new partnership between Instacart and Pinterest. Now pins can now penetrate the food and beverage industry. So somebody could click on this cocktail and it's going to show you all the recipe items that you can just buy instantly on Instacart and have delivered to your door. Now there is a risk with Pinterest that Pinterest is highly vulnerable to AI slop. Essentially AI slop is what you see in the top right, just AI generated crap that will end up on social media. You can see this on Instagram, but over here on the left you see an AI generated picture on Pinterest. And basically if the posts aren't real, then there's nothing to advertise because there's no items within the post to advertise, and this could ruin the experience for users. Now luckily Pinterest is slightly tackling this by using the AI generated tag down at the bottom. They do know how to identify what is AI generated, although I have seen them get this wrong a few times. Hopefully that this technology gets a little bit better in the future. Now when it comes to Pinterest, their operating cash flow margins are way below what Meta has. Meta is sitting at 57.2%, whereas Pinterest is sat at 27.5%. We are seeing this start to tick up since 2023. I think that it can tick up a little bit further, especially as they continue to monetize their platform. Their free cash flow margins are actually very similar to Meta's now, and this is because Meta has huge capital expenditures at the minute, investing heavily into AI, whereas Pinterest is barely spending any money really. They are not creating data centers like Meta are. When it comes to my valuation for the stock, you can see that I've given it a buyback estimate of 0%. Revenue CAGR of 15%. It's just below what they're currently doing at 17%. a free cash flow margin at the end of 30%. They're currently sat at a 26.85% free cash flow margin, so a slight increase up to 30%, which we see Meta had last quarter. I do think that Pinterest will be able to reach this margin, and it should be perfectly achievable for them. Now, when we look at stock-based compensation, obviously this has been growing at 18% year over year. I've lowered this to 15%, and this really affects the returns. If you look at the current stock-based compensation adjusted free cash flow yield, we get 0.92%. Looking into the future, it's likely that Pinterest will trade at around a 2 to 2.5% stock-based compensation adjusted free cash flow yield, and this only offers us a 2.74% CAGR for the next 5 years. This is the same when we look at free cash flow yield of 2, with a CAGR of only 7.43%. And if stock-based compensation continues to grow, returns basically they just look bad. They do not look good at all. The key here is that they really need to get their stock-based compensation under control, because if we look at a difference, just lowering the stock-based compensation from 15 to 9%, we get a 12.14% at 2.5 free cash flow yield and a 17.26% at a 2% free cash flow yield. So if stock-based compensation continues to grow at half the rate that it currently is, returns look reasonable. I wouldn't say that this even looks majorly attractive. There is a big if as well, that the stock-based compensation CAGR is at 9%, and that's obviously a huge cut. So I personally will not be investing into Pinterest at these prices. Unfortunately, the company seems to be bogged down by stock-based compensation. They do, however, have a very bright outlook in my opinion, and they're sat in a very good position to make great use of AI. Here is my portfolio for anyone that wants to have a look. I'll be releasing another video soon on the top stocks to buy, and I'll see you later guys. Please like and subscribe. Bye-bye.
I'm hopping out Ferrari. My house is 3 stories. I'm still independent cause y'all couldn't afford me. The meetings were boring. For real, I was